As the price of food, fuel, electricity, and other necessities begins to rise around the world at an increasingly alarming rate, more and more people are looking for ways to protect their hard-earned savings from inflation. This has led to many venturing into the precious metals sector, some for the very first time. The idea of having gold, silver, and other precious metals as a hedge against inflation and a means of exchange in a time of economic crisis is not a new one. But the landscape isn't entirely populated by well-meaning companies looking to provide that hedge for the going market price. Many dealers of precious metals run high-cost advertisement campaigns, the sort you see sold between programs on big cable business news or political channels. Precious metals, however, tend to trade at extremely low profit margins. How can these dealers afford such expensive mainstream advertising campaigns? Do they make it up in volume? Unlikely. To this point, less than 0.5% of all investment capital in the United States is allocated to precious metals. Usually, these companies are preying on individuals' fears and steer them into one or more common scams in the industry. They offer up some interesting truths about the economy, global debt, inflation, then offer you the solution to the problem, while helping themselves to a healthy portion of your life savings. Here are a few of the common scams you should avoid when dealing in the precious metals. Semi-numismatics. One of my favorite jokes is that semi-numismatics are like semi-automatics, except every time you pull the trigger you lose money. Semi-numismatic is a fancy way of saying semi-rare or semi-collectible coins. These coins supposedly offer additional value above the content of their precious metal due to the limited run of coins put through any given design. The most common example of a semi-numismatic is a product from a national mint like Canada, the United States, Australia, China, or Europe, but coming in an odd weight, say 1.5, 0.5, or 2.0 Oz, or featuring a new design on one side of the coin, with a design from a familiar bullion coin on the other side. The problem comes with the premium charged above spot price, which can in some cases be 50% or even 100% above the value of the silver itself by weight. When you finally decide to sell your semi-numismatic coins, chances are whoever is buying it is going to be far less concerned by the limited run your coin had, and much more concerned with the weight of precious metal they see in front of them. You are therefore being pushed into a far narrower market looking for collectible coins instead of the more widely traded bullion, and the liquidity of your investment suffers as a result. If you need to sell your coins quickly, you may not be able to find a buyer who is also interested in the rarity aspect of the coins. Most times, the limited run of the coin is never worth the markup to begin with. A coin from a bullion mint with similar designs and an odd increment does not a collector's item make. Usually, a semi-numismatic that takes off in value and popularity comes from a private mint and is sought after for its aesthetics or timely political message. These popular designs don't stay limited run for long though. Oftentimes, the designers will reissue the design on a different size coin, or with a different striking method or finish, or in a different precious metal. While not technically violating their limited run of your coin, they still manage to flood the market with the popular design, indirectly lowering the collector's value of your purchase. It's also a rare design that takes off in value. There are literally hundreds of these designs on coins out there on the internet, and 90% of the collector's value is limited to 10% of the designs. The rest just become overpriced bullion, valued only for their weight of precious metal. This isn't to say all semi-numismatics are bad. If you want to give a friend or yourself a gift for something like a wedding or a baby shower, coins or rounds with a flashy or meaningful design could go over better than a bullion product that might be regarded as boring. But for your core investment position in precious metals, we suggest you stick to bullion. Numismatics. Numismatics are slightly different creatures because these are literally old coins that can't be made anymore. Everything from before 1933, all the way back to ancient Greek and Roman coins. Can you make money in rare coins? Sure, sometimes, under the right conditions, if you know what you are doing. Is it the same thing as investing in precious metals? No, really not at all. The supply and demand factors for rare coins is wildly different than that for bullion. The price of gold or silver may double, and the value of your numismatic coins may halve or stay the same. The truth is, rare coins trade more like fine art, stamp collections, or baseball cards. They go through fad periods where items are in demand, and then people lose interest and the price falls. Supply is unpredictable also. Somewhere an estate sale is dumping rare coins into the market from a previously unknown supply, or a diver discovers a wreck and makes your rare shipwreck treasure less of a collectible by increasing the supply. In addition, there's a much greater risk of getting a counterfeit numismatic coin than a counterfeit bullion coin. There's much more financial incentive to counterfeit a rare $50,000 coin than a bullion $2,000 coin. There's also many more people who can properly identify the $2,000 bullion coin as possibly fake than the $50,000 rare coin. Dealers might also try to lure you into buying rare coins because they were exempt from the gold confiscation in the United States in the 1930s. They'll argue it could be the same way again. However, we see the same sort of confiscation as unlikely this time around. For one thing, the public at large holds much less precious metal than in the past. Next, there are much easier targets available, like major ETF holdings of precious metals, private storage vaults, or say forcing your 401k or other retirement plan into buying increasingly worthless government bonds to prop up the system. Even if governments ordered people to turn in their precious metals, going door to door looking in every nook and cranny for grandma's old silverware is likely to backfire and be seen as a violent overreach by the government. Although I wouldn't put it past the government and the mainstream media to attempt to demonize holders of precious metals as being the cause of the economic crisis, when in reality it's their own corruption and economic mismanagement that has led us into one economic crisis after another without ever really addressing the core issue of out-of-control government spending. Bottom line, if someone is trying to sell you rare coins, particularly if you are new to the precious metals market, you might as well end the conversation right there. Rare coins are a completely different market with wildly different variables to account for. And personally, I don't believe they are the best mechanism for carrying your savings out of the currently dying fiat currency system. You're not likely to see the same percentage returns in your rare coins as we expect in bullion long term. If you want to dabble in rare coins after you have a healthy position in bullion, we recommend you do your own research first. A lot of research, and then only use a small portion of your overall funds to speculate in rare coins, unallocated accounts. Unallocated accounts sound great at first. A dealer or a mint with a reputable sounding name, and even a decent track record, offers to sell you gold or silver for a stunningly low premium over spot. It's better than any deal you can find, and they'll even offer free storage in their vaulting facility, so you don't have to worry about securing it yourself. Of course, if it sounds too good to be true, it probably is. Unallocated accounts take your money but don't directly assign any particular coin or bar in their inventory to you. Your investment might actually be too small to constitute an entire bar anyway. It merely gets you a claim on what are usually 1,000-ounce bars going through a mint or refinery's inventory. The problem starts when there's some kind of crisis in the market. The price jumps and you want to liquidate your position, or you decide to take delivery of your product. But you've exposed yourself to counterparty risk. That is to say, does the dealer actually have the metal they said they have for you? This is when the excuses start. The deliveries were held up by another company, and so went bankrupt and didn't send the product they promised, or the company was cooking the books the whole time and used your money to trade futures positions that may or may not be delivered by the commodity exchange. So when you've asked to get your silver delivered to you, they say it'll be 3 months or 6 months, And at the end of that period, it'll be another 3 or 6 for fabrication of smaller bars for an exorbitant fee. Maybe you eventually get your metal, maybe you don't. The company offering it could be upside down in their position, and you're too far down the list to ever get your metal before the whole scheme blows up. This is not to say there aren't legitimate vaulting services out there, but generally they are going to charge storage fees, give you the serial numbers to your bars, and charge you a premium for the products over spot. These are allocated accounts. There's a reason for the saying, if you don't hold it, you don't own it. In a crisis, having your metal in a vault halfway around the world might not be advantageous to you, although there are circumstances where it could. Desperate governments around the world might target private vaults should there be a major crisis and fiat currencies around the world collapse, or they might come in to levy some kind of wealth or windfall tax on your metal because you had the foresight to get out of their fiat Ponzi scheme while you had the chance. The private vault owners themselves might go rogue if law and order breaks down in the area around the vault. As always, measure your risks accordingly and make sure you have a backup plan. We'd be more than happy to discuss your options with you. Disclaimer: this blog is for educational purposes only. It should not be considered individualized investment advice. Conduct your own research before making any investment.